Mm, Let's have a little wake up, boys. I opened the desk today. It's there at 6 a.m. my time. It's about 13 hours ago. So I was having a little kip before the stream today. Interesting to wake up to the CCB news now. Yeah, I know. I know. It's like, well, they're keeping rates on until whole. That's not the interesting part. That's not the interesting part. Everyone knows that they're not raising rates. A little surprising, maybe even bullish, is that they're not cutting rates. Okay, now that's one bullish way of interpreting it. But what we were interested in with this ECB news is when it came out and what they said about QE. We're not so much interested about the interest rate moves and dropping them even further, although that is pretty important. If they're not going to drop them further, that means that the euro does have some support. But it's more about the risk-on appetite. Right, so we're talking about how to make money out of the news like this. What is the news that it helps? Now, the news that it helps, it's definitely helping euro pound bounce. So that's not great. But it does help risk appetite. Okay, it helps risk appetite because it calms the bond market. This line here that they're unlikely to come to an abrupt end next March. Now that's going to run. The market's going to run with that. I can tell you that for sure. That's going to be a theme that the market will look at. So I'm going to buy a little bit of DAX. Well, not really enough. We're finding new ways to lose money. Just on the case that the bond market stabilizes, and especially European bonds, and that helps the US. This is the first salvo, it looks like, from the central banks, and this is what we're waiting for. Actually, we're waiting for the ECB to come out and say something about this, because they started this whole sell-off. Right? They started the stock market sell-off back 2 weeks now, when the ECB failed to extend their bond purchasing program. Just 1 sec, let me have a look at some things. I'm going to buy a little bit of this. Get a little bit of that, little taste. I don't know. You see, I'm probably gonna take a loss on this euro pound. Where are we at with it? So on that particular news, I mean, it's bullish and bearish. It's bearish for the euro that they're going to extend QE. It's bullish that they're not going to cut rates. Depends how you want to look at it. But either way, just straight up, that level is probably going to get hit. But I want to have a cut just so I can sleep at night. See what the pound wants to do later. That'll be enough. 86.10. It's already 20 pips above my 85.90. A little compromise between my conscious and my war footing brain. There's a little bit of rebound happening in Aussie Kiwi. That's the first little strength it's seen for a while. Now, this is on the back of I think market repositioning ahead of the RBNZ. And you might see more of this during the week. It does not mean that the Aussie Kiwi is going substantially higher. It's just that if you're short Aussie Kiwi, perhaps it's time to take profit. The RBNZ could be a blockbuster if they, by chance, can work out the words to say what we need to hear to sell the Kiwi. I'm not even sure what they need to say right now to sell the Kiwi. It's definitely they have to acknowledge that they're on a dovish footing. They probably have to start threatening intervention, and maybe that will be enough to not let the Kiwi bounce. I'm thinking anything less than that. So pretty much explicitly suggesting September's where the rate cut's coming next, and I don't have the Kiwi on this China package. Just 1 sec, guys. Let me get it up. I'm always talking about it, but never So we're discussing what can the RBNZ say to get the Kiwi to sell off. I mean, reiterate that they're going to cut 1 to 2 more times. That is the very least, and potentially start warning on intervention a bit more forcefully than they did last time. And don't mess up. Don't mess up. Don't say things like, we're not looking to cut rates quickly. Don't say things like, not much we can do about the Kiwi dollar. Don't say things like, what did they say last time that was ridiculous? Oh, we knew after we cut rates that the Kiwi dollar was going to rally. That's what the governor said. Excuse me? Excuse me? You cut the rates to keep the Kiwi lower. And then when the reporters ask you a couple hours later, what do you think about the Kiwi rallying? Oh, we thought that would happen. I mean, your job is to make that not happen. Alright? I swear I could be a better central banker than most of these guys. Although they are getting forced down a road they don't want to go. I mean, even RBA is getting forced into a rate cutting cycle that they don't really want to do. We're going to look back in a few years at this and go, what the hell were they thinking? Yeah, no, the extension of it though, Potter, has been talked about, mate. Extension of it. Yeah, so I mean, it's not just so much fulfilling the ECB; they've got to actually extend it too, right? We want extension on the actual on the program that will calm the bond market. So Fed come out, calm the bond market. BOJ come out, calm the bond market. Then we can go back to buying AJ and buying Aussie US and buying stocks. And you know, the EC central banks work like clockwork these days. They're very, very interventionist in the market. And even the small pullback that we've had in stocks in the last 2 weeks is enough to get them freaked out. So we'll see how it plays out this week. But this is the first little beginning of the jawboning by the ECB to calm the markets that we've seen. Yeah, holding rates is probably a little bit more. If they rule that out, cutting rates, I don't think they can stop the euro rallying. Sorry, I don't think they can stop the bond markets rallying. They should just say that they haven't ruled out cutting. Same as the BHA. Everyone's a little bit suspect on the negative interest rate policy at the moment. By God, is there a lot of research today? I suppose every bank wants people to read their RBNZ reviews. No, I'm not reading your research. I've already read enough. Like, I read like 2 or 3 on each of the banks. I don't want to get involved in that. Let's have a little look at ANZ though. Very good bank for the New Zealand dollar, and what they say. Yeah, it's all about the bond market. They don't care so much about the euro. Yeah, so this is basically everything that we said about the RBNZ. OCR bias lower, consensus in the market, we expect OCR no action. The New Zealand is too deflationary to ignore. So a really strong New Zealand dollar makes buying things overseas, and New Zealand's a little island, right? So they buy a lot of things. If the Kiwi's getting stronger, then they're buying things cheaper, and they've got an inflation problem, so they can't have this, right? They're just half of what they're doing with the cutting interest rates is to keep the Kiwi lower. But apart from the New Zealand dollar being strong, there's not many reasons to cut. I mean, apart from the low inflation. Alright, New Zealand dollar continues to outperform. It's just below 78, and on TWI basis, threatening to test parity against the Aussie dollar. Okay, this is what definitely is on their mind. Okay, it is above the RBNZ's alternative MPS scenario. So they put out a few scenarios when they did their report, and that had the interest rate, the RBNZ interest rate, heading far lower to 1% from 2%. That's 4 rate cuts. Now, if they start talking that, that's New Zealand dollar getting ripped apart. That said, the domestic growth and commodity prices stronger. Remember, milk prices up 30%, 25%, but expectations of another 5% gain at this next meeting, next dairy auction in 2 days' time. Tomorrow night. I'm gonna feed you some bad information. Like our BOE meeting last week. That was fun, wasn't it? Carney, he was really forceful. So this is the thing I'm talking about, the global dairy auction. So it's Tuesday night, comes out about 12 midnight our time, so 5 hours in the future tomorrow night. 5 hours from now. 1 day and 5 hours from now. Yeah, so I don't know what the right things to say that they're going to say to get this Kiwi lower. Let's we expect further pulsing of his fuel. Alright, so perhaps they'll signal more than 35%. Alright, they can't really change this though because they don't have the new MPS to change it. They've got a tough job. I wouldn't want to be the Wheeler right now. I wouldn't want to be Wheeler right now. I don't know what he's going to say. How's he going to get the Kiwi dollar low? Especially if, the ECB, BOJ, and the Fed come out to stabilize the bond markets. That's going to create more of that divergence trade where the Kiwi outperforms and the Aussie outperforms. Speaking of that, pound Aussie. Just ripping it down. Where are you, pound Aussie? Now, we were considering buying this only last week. But this divergence trade, if it's kicked back into gear, if the Fed and BOE, I suppose you can put them involved in the talking up the market crew. No. They can't cut rates until they see the next inflation number. then they can cut rates justifiably to the market, right? So we're looking at about they can cut rates every 3 months, similar to how the Aussie was moving, but they may be more forceful in their tone. Try to stop the RBNZ, stop the New Zealand dollar rallying. So maybe they're even talking intervention. Billman's asking about pound yen. Look, we are going to go in depth about the UJ tomorrow, but we better touch on it right now. So there is not much hope here that the BOJ is going to announce something nuclear on on Wednesday afternoon. Now, there's talk that there is not much unity in the BOJ, that there's no willingness to do foreign bond buying, and that the rate cut, if it is coming from the BOJ, is not going to be this month, right? And those expecting it are going to be disappointed, and all you're going to likely see is a modification of the QE program to be more focused on buying front-end bonds. So you've heard probably a lot of talk in the market about steepening the yield curve, whatever the hell that is in your mind. That's more to do. It's more to do with buying short-term bonds rather than buying, say, 10-year bonds or 20-year bonds. This is really a thing to help produce profits for banks. And with banks being profitable, the idea is that they will lend more and the economy will do better. It could disappoint the market, who's looking for more stimulus and more action from the BOJ to get the dollar yen higher. So it's very likely on Wednesday we might have some disappointment and some dollar yen selling. Dollar yen selling, you can see, is directly related to Aussie and Kiwi buying and US dollar selling against some other pairs. So there's a case to be made that we're going to see some, in particular, we're going to see an Aussie US rally into the Fed announcement, kicked on a little higher by the disappointment from the BOJ. Alright, so for me, the plan that I'm looking at the moment is more for the Aussie to grind up towards about 76, going into the Fed. And we'll talk more about the Fed obviously on Wednesday. But if we get anywhere near the Fed, 76, for me, I'm interested in selling the Aussie. I do think that there's going to be a hawkish hold. Alright, so immediately, say it's 76 and they come out with a cut, with a hold, and the market might pop higher as there's some pricing in of a hike. I'm looking to sell into any sort of pop, as long as we've rallied into the announcement. And I think that Yellen in the conference is going to come away sounding hawkish. I think that she's really going to try and talk up the December rate hike chances, and if she does that, I think the market can only be US dollar strength, especially if if there's been selling US dollar into the event. Right, so that's my plan anyway. If we get some continued Aussie strength, some mild to medium-sized dollar yen selling, fueling US dollar weakness, then I'll be looking for opportunities to sell Aussie and sell Kiwi into the Fed, and perhaps even buying dollar yen into the Fed if it's low enough, lower 101s. So yeah, I mean that's the plan for me anyway this week. But who knows? I mean, that also relies on stock markets being very stable, and they could be the surprise in the market right now. I suspect that the pound is going to struggle. So usually last week I was talking about buying pound in scenarios where the Fed is I don't know, a bit more dovish than expected, or maybe there was a pre-Fed rally. I'm not touching the pound long anymore. So on most of my accounts, I've closed out all my pound. On the signal account there, I've still got some euro pound short. It's definitely going to be a big week. It's definitely interesting. And that ECB news is not insignificant. I think that's going to help. That's helping stabilize. Um, Probably going to help the US stocks rally, and that will help the Aussie continue its little creep higher here. Data-wise, Japan was away today, so there wasn't much in terms of data. And there is literally nothing tonight of note. So it's more about positioning yourself here for the BOJ and the Fed, and the market's letting you know what it expects. No rate cut, no rate hike from the Fed, and no action from the BOJ. If the dollar yen is at low 101s, that's going to be interesting going into the announcement, because into Wednesday, because then it's relatively close to the big 100 level, and maybe we'll try and take some stops there. Still, after the big sell-off initially, you only 14 hours later you got the Fed, so exactly how much lower than 100 it could get remains to be seen. And if the Fed comes along and comes across as hawkish for December, then you might see a nice recovery in the UJ as well. So yeah, I'll be sniffing around at 100 or just below if it's done. If it does it before the Fed but after the BOJ on Wednesday. Well, let's do a couple more reports. I'm not going to have a big one today. Tomorrow we'll spend a bit more time on the BOJ, and then on Wednesday we'll spend some time on the Fed, and also look at the RBNZ a bit more in depth. I know a lot of you in the Aussie Kiwi trade. That's interesting if there was intervention in Euro Swiss. Euro Swiss, if you remember, we were talking about it while we were looking to buy on the pullbacks, and it just wasn't pulling back even with the stock market. It was really quite odd. Looks like there was intervention according to the site deposits, which tracks S&P holdings. That means obviously dollar Swiss might be technically on the break. Where are you, dollar Swiss? Interesting. Interesting. I don't know if we can buy it if the euro is going to have a nice little relief rally on that. No more cutting news. Because when euro goes up, dollar Swiss goes down. Still, maybe we should follow the technicals for once. Looks pretty strong. A little bit high. Alright, we won't chase it. But yeah, it's starting to look constructive. If we can get back above parity, obviously that has been a key number in the past. Don't need to talk about that though. Trend line is not allowed to be boring. The FOMC is not allowed to be boring. Although she could be. She could be this like perfect little combination of not talking about raising rates too aggressively and concern about global volatility in the bond market. I mean, she might even explicitly say that. Just a big shout out to the bond market. Enough to give the market a pause, something to think about, but nothing to really gain traction on. And that would be terrible, man. We're almost breaking out to the downside on the Aussie. The euro is almost breaking out to the downside. We want a trend, right? This choppy, whippy reversal shit that's happening nearly every 2 weeks. Is the Fed going to raise? Oh, no, it's not going to raise. This stuff that we're playing, this 200-point range in the euro is just terrible. Without the euro big time moving, we're all becoming yen traders, and yen trading's, I mean, it's okay, but it's only like 20% of the game. We used to play euro against everything. Aussie itself is also just stuck in that sort of range. Alright, so we're reading Jim Reed. Now, the reason why we read this, we talked about that, is that it is the most widely read report out there by big hedge funds and by big investors. BJ's between 1 and 3 p.m. Australia time on Wednesday afternoon. The later it is, the more disagreement they have. So sort of sometimes when there's really late announcement, we start to ponder, what are they talking about in there? To say I've got no idea what they are going to do is an understatement. Oh, Jesus. He's got no idea either. Yeah, all that bomb stuff in the US is just, it's nothing to get the market. I mean, it has to be such big news now to get the market to react to it. As sad as it is, like literally hundreds have to die. Like 50 dying is not enough, right? The market doesn't react anymore to terrorism. Alright. So what went on with the sterling on Friday? Woke up Saturday morning, it's like, what the hell happened to the pound? There seems to be a little bit of rustling over the UK and Europe. Also, I mean, over the weekend you had the Slovakian PM. I think he's representing like the Polacks and a few others, suggesting that Polacks, I don't even know if you can say that, Polish, and a few others, saying that they want the working immigrants in the UK to have rights and to be looked after. Otherwise, they're not going to sign off on UK's proposed trade agreement with the EU. They're actually very aggressive in it. So that's from the Slovakian side. I suppose from the UK side, they have to move forward with this leaving of the EU, even if they have those immigration restrictions. So, I mean, that's the most important thing that the people vote for. So they have to get that done without wrecking the banking sector, which is the biggest thing that the UK has. Oh, nothing too hard hitting in that. I'll finish up with one more little look at if you want to read one thing about bond market, read this one. I read this earlier today. So this is Greg Gibbs. He's very good. Yeah, no, it's not tentative. I just know when it's. I'm a dealer during the BOJ announcements trend line. It's between 1 and 3. It can come out earlier, but I don't think so this time. So 12 and 3 then, if you want to talk Sydney time. Okay, we read that last week. Nothing new there. And also Pritchard, Ambrose Evans Pritchard. Now he's a pretty big bear. He also put out a little note over the weekend. The BIS came out with a warning about China, as Trump calls it, and basically saying there's a huge risk to the world economy because of the amount of Chinese debt. Outstanding loans have reached 28 trillion. I'll put that in the link as well, guys. If you're watching this on YouTube, come across to. So 28 trillion. That's ridiculous numbers. And the shadow banking supposedly huge. So they've got a huge shadow banking sector over there. So lending that's from non-bank lending, non-traditional bank lending. I don't know when the Chinese bubble's going to hit, right? But it has to hit. No country does what it's done. And it doesn't end well. They've got a very firm grip of the financial media, but at some point reality will hit, and there'll just be a big wave of defaults and some sort of government backed bailout of the banks. That's just the way it's going to play out. But during that time, the Aussie dollar will get crushed, whenever that is. Alright, boys. That's enough for today. I'll be back tomorrow at 9 GMT. Hopefully I'll get a big enough rest so that we can do a full review of the BOJ and probably do 3 or 4 different banks outlook on it. I mean, BOJ has the potential to be bigger than the Fed this week, but unlikely, and unfortunately they're likely just to be the underwhelming, and the market's starting to price that in, so you may not get the big action that you want. The Fed, I'm still leaning towards them being a hawkish hold. Let's see how Yellen responds to questions about the bond market sell-off. But also take note of what this ECB announced, this insider from the ECB's come out with, which is what we were talking about last week, with stabilization comments mainly directed at the bond market, but have been taken hawkishly by the market. So there might be some clarification of the comments by this by new ECB sources in coming days, because I don't think the market got the memo. Ran with the headline that they're not going to be holding rates at where they are, not cutting further. And really, I think they're trying to push the QE part past March. All right, good luck with your trades. Trade safe.